Hey traders, welcome to this week's Forex Focus. I hope you've all had a good week in the markets. It was certainly a bit of a tricky one, what with the risk coming into the markets with Signature Bank and also Silicon Valley Bank. And then you had the issues with Credit Suisse as well. So, the banking sector has really taken a little bit of a hit over the past week, which has obviously caused some of the central banks around the world to start to address their rate hike cycle and also provide some liquidity into the markets as well. And all of that is impacting the currencies and also impacting what we're looking at in terms of the sort of like our next 3 to 6 month view. And that's what we're going to talk about in today's Forex Focus. Obviously, we'll look at the major pairs, we'll look at the opportunities that we potentially could take in the week ahead, but we also need to look forward a little bit further to say, what is that going to mean? What is our longer term view? Because as you know, when you're trading with a longer term view, ultimately it allows you to have a better win rate, which is going to allow you to be more profitable overall. Now, when we're talking about the central banks, and unfortunately that's been the focus for the past, over the past year or so, but certainly now, with inflation starting to come down a little bit in various regions in the world, but obviously the central banks are mindful of the fact that they don't want to they don't want it to start to rise again. So we're in this sort of situation where central banks are still hiking interest rates, but now they've sort of moved to a policy where they're looking at the data and they're going to make their decisions based on the data that's coming out, the hard data, rather than obviously giving being more forward looking and saying we're going to hike rates at the next several meetings at at X sort of percent or whatever, which is what they've been doing up until now. So now what's happened is that we are sort of slightly hawkish, let's say, across the board. So ECB came out this week, they raised their interest rates, but they also said that they would look to raise interest rates further, but they would be paying attention to the data. That's been the same situation from the RBA. Later on next week, we're expecting the Bank of England to come out and potentially pause their rate hike cycle altogether. And then again, obviously pay attention to the data and things like that. So that sort of made it a little bit tricky for us as traders because we don't have that forward guidance. And when you have the forward guidance, it allows you to have that expectation as to where the differentials are going to be, which ultimately is what drives currency prices over the medium to long term. So what that means for our portfolios, for our trading, is that you probably need to be a little bit more tactical. And that means taking shorter term positions, going for maybe sort of like a 1-to-1 reward to risk ratio, rather than looking for those longer term opportunities that you could hold for a number of days or perhaps even weeks and go for a 2, 3, 4, or even 5-to-1. I sort of think that we're in that situation at the moment, mostly. There are a few exceptions to that rule then. We will talk about that as we get to those particular pairs. But I think generally speaking, that's going to be the way that we play it. So we do expect the central banks to raise interest rates. I think what happened this week with Silicon Valley Bank and Signature Bank and Credit Suisse, where actually the SMB had to come in there and provide liquidity, what essentially we could be seeing here is ultimately an end to the rate hike cycle, assuming the inflation continues to come down. And this could be sort of like the turning point that we look back at in 12 months' time and see that this is where central banks started to pause their rate hike cycle, maybe not at this meeting, maybe in the next month or the month after, and then we will start to see that they will begin to cut rates, because what they will do, and it was actually mentioned in the ECB's press conference as well, is that they're now not just looking at inflation, they're now looking at the financial markets as well. So how is that affecting companies? How is that affecting the economy? Whereas before it was just about price stability, it's about maintaining inflation and bringing inflation down. They're seeing that is starting to work. So now the next part and the next mandate of a central bank is obviously, to protect the economy and to protect jobs and the consumer and things like that. And I think that their focus is starting to shift somewhat towards that, which means that obviously there'll be other data that we'll start to focus on as the weeks progress. But as long as you're watching the Forex Focus here, I will make sure that I keep you abreast of all of that news so you know exactly what to look at and what's going to affect the markets. So let's jump over to the charts and let's see what is setting up for the week ahead. We'll start off by looking at we're on the dollar yen chart here. Let's jump across to the Aussie dollar. So we'll start off by looking at the Aussie dollar. The Aussie dollar here, we can see it was in a downtrend as we spoke about. So we're talking technically at the moment, right? And I'll talk about some of the fundamentals if it's relevant to that particular pair. But from a technical perspective, we can see that it was in a downtrend. The market then started to recover somewhat. It recovered to a previous high. So it actually reacted to this high over here. And then the market started to sell off. It is now sold all the way back down below this structure level printed here on the 14th of July, which is a very bearish sign. If the market can hold below that level, we've got our indicators here indicating that the momentum and the condition is definitely bearish. So we are looking for some shorting opportunities. And essentially what I would be looking for here is for the market to crack 0.6564. If it can get below that level, then I think that really we're going to see a big move to the downside. Now, this is something that will go for all of the major pairs that we're looking at here, because obviously they have the dollar involved. We do have the Fed meeting later on this week. Now, it's interesting because if we go back to the week before last, okay, you had Fed Chair Powell come out, and his testimony to Congress was very, very hawkish. He was talking about, more rate hikes, more aggressive rate hikes, which essentially sort of provided a little bit of support to the dollar. People were starting to price in, more aggressive rate hikes. And what we were looking at was a 50 basis point rate hike, and there was a potential for that. And then obviously we had the Signature Bank, the SVB, VB crisis, Credit Suisse and everything started to affect the markets. And what you saw with the Fed Watch tool was that actually the percentage from a 50 basis point hike actually decreased completely. So that's almost off the table at the moment. And what happened instead is, whereas previously the Federal Reserve keeping rates on hold, so actually doing nothing, whereas that was 0%, at the beginning of last week, that went up to almost 50%. And then by the end of this week, it's actually dropped a little bit more. So it was sort of around the 20% level. So what we're looking at is the potential for a rate pause altogether. And I think we'll sort of have to pay attention to what sort of transpires in the markets early next week to really get a view as to what they're going to do. And then the most likely scenario is that they're going to hike rates by 25 basis points. And I think that's what the markets have got priced in at the moment. And I think what will happen, so if we're looking at the dollar pairs here, if the Fed keeps rates on hold, you might see a little bit of a pop-up, not just in the Aussie dollar here, but in the euro dollar, pound dollar, dollar yen, etc. You will see essentially the dollar will weaken. But then what you'll want to look at is, well, what's the forward guidance? What are they saying about the future? Is this the end, or are they going to take a look at the financial markets, see how it fares, then maybe return to hiking rates again? Because I think one of the big risks here, if the central banks do start to pause their rate hike cycles, is that inflation could sort of take hold again. And what we will end up with is inflation higher for longer, which will mean that the central banks have to be even more aggressive than they previously wanted to be, which essentially would affect the markets even more, not just the currency markets, but the financial markets. So I think that they're smart people. They'll be aware of these things. These will be things that they'll be looking into, but it's stuff that we need to consider as well as traders. So if we take a look here at the Aussie dollar, I think from a technical perspective, we want to be selling this. I think as long as the Federal Reserve come out here and they are hawkish, so even if they were to not raise rates, which I think is unlikely, but if they weren't to raise rates, but they were still saying that they're looking to, at the next meetings, raise rates, and they're just sort of waiting to see what the fallout is of the current crisis, then I think that we will still see dollar strength across the board. So we will see the market break through this level to the low here, and that will really be a really good opportunity for us to get involved in the markets. That's on the daily perspective. If you look at the 4-hour perspective, you can see that case is even bigger. So we've been in a bit of a downtrend in the lower time frames for much longer, and we're actually at a previous level of support which could act as resistance. So that's a really, really good opportunity there as well to look to sell. So both on the longer term charts and the shorter term charts, it's really pointing to further moves to the downside. Then if we look at the euro dollar, so this one is a bit of a tough one because they're saying very, very similar things at the moment, both central banks. So it's difficult to know which way this one is going to go. Indeed, from a technical perspective, you can see that it's in a range, so the markets don't know which way it's going to go. So from that perspective, I would say that we can almost bracket this here, and we can say that we don't want to take a long opportunity until we're above the highs at 1.0763, and we won't go short until we're below the lows at 1.0521. And instead of maybe looking at that on the daily, you can look at it on the daily. Maybe you jump down to a lower time frame and look to trade the trend once the market is out above the level or below the level. I wouldn't want to do much while it's in the middle of here because there is no real direction. We don't really know who's in control. And if you don't know who's in control, then obviously that adds further risk to your trades. Okay, so euro dollar could go both ways. Jump across to the pound dollar. The expectation this week is that the pound dollar, the Bank of England, will actually pause their interest rate hikes. If that happens, then I think that the pound will probably, perform pretty badly. If that happens in conjunction with a hawkish view out of the Fed, then we can really see the pound dollar start to sell off and we can start looking for shorts. This might be one, if you look at the daily charts, it's a little bit untidy. So this might be one where you have to jump down to the 4-hour or even the 1-hour chart and look for shorting opportunities there. So this one, I think up until the rate announcement, it could go sideways. There's no real direction there. But once that comes out, then certainly it's something that we need to take advantage of. These are some of my favorite trades. If you do have a fundamental driver here, and like I said, for most of them, it's going to be looking at what the Fed do. With something like the pound this week, because we've got the Bank of England interest rate decision later on in the week, because we've got that in conjunction with the Fed interest rate decision, this could be one of those where actually we do have a fundamental drive, which is going to allow us to take more of a longer term view with this particular pair here. So we need to wait to see how that goes. I'm kind of looking at the data and everything. I think that overall the pound will underperform, if not this week, then certainly going into the next week. So I'm looking for shorting opportunities here. Even though on the 4-hour chart, it may look like it's bullish, it may look like it's, it's breaking above. But that obviously, that's my view. I will react once the price action tells me. I'm going to look at the data to try and anticipate the markets. I'm not just going to trade because that's my view. I need the technicals to confirm with the fundamentals to get me into those trades. The New Zealand dollar. So the New Zealand dollar here, so if we go to the daily charts. So the Reserve Bank of New Zealand, we're expecting to continue to hike interest rates. However, last week was a bit of a bad week for them. They saw GDP come in under expectation. So the markets are looking at New Zealand and thinking that perhaps they're going to be looking at a recession hitting a little bit earlier than they first anticipated, which might mean that they may be forced to look at pausing their rate hike cycle or cutting interest rates sooner. But having said that, inflation is still high. So we still think that at the next meeting, they may hike rates again. But overall, over the next, let's say, month to 3 months, we will start to see that weigh on the New Zealand dollar. And I think in 3 to 6 months' time, we see the New Zealand dollar down at the 0.59 level, maybe even below there, going towards the lows over here. I think that is certainly something that is a possibility. But again, we'll wait for that to play out technically. From a technical perspective, this is really in a situation where the indicators are pointing to the market selling off a little bit, okay, in the sense that they're below the moving averages and things like that. But the reality is that technically there is no real direction here, okay? Not on the daily chart. If you jump down to something like the 4-hour charts, you can see that maybe it's looking a little bit more pronounced here. There might be an opportunity. But I think that ultimately what I would want to do is really see the market make a decision from the daily chart and then look at it on the 4-hour. Whereas some of them, we want to look at it. We'd be happy to take the trade in the steer from the 4-hour chart. This one, I just don't think it's clear enough to be able to do that. The dollar CAD, so the Bank of Canada are sort of like they're pausing rates at the moment. So they aren't hiking interest rates. They're not cutting interest rates. They're just sort of pausing it. They're doing nothing at the moment, which is why you can see that it's faring obviously not as well against the US dollar. Now, Looking at next week, we've got inflation data out of Canada next week, which might be a bit of a mover on the market. But other than that, there's not a lot out of the US next week. So I think if we were to get a hawkish statement out of the Fed, if we were to see interest rates rise in the US, then I do think that this one is going to play out to the upside. So I'm looking for opportunities to buy the dollar CAD for the next week and indeed for the week after that. I think looking at this chart here, it looks bullish. If we get the opportunity, so if the market breaks to the upside, I'm looking to be a buyer. If it breaks to the downside, I won't really do anything. I think that will just be a dip buying opportunity. So I'll wait for the market to reverse and then again look to buy. So that's where I am with the dollar CAD. The dollar franc is a tough one to trade. So the dollar franc, you can see that it's kind of been moving sideways for the best part of a couple of months here. It then started to sell off last week. Then we had, issues with Credit Suisse come out. As you can see here, the market's obviously rallied. Remember, the dollar is the base currency here. So if the market rallying, that means that the Swiss franc is obviously getting weaker. Now, obviously, the SNB came out and they provided liquidity. They sort of shored up the markets there, which was a good thing. So you saw this decline here in the Swiss franc pause for a little bit. But going forward, I don't have any real views here in which way this can go. So from that perspective, I'll probably sit on the sidelines. I won't do anything with the dollar franc. Finally, we've got the dollar yen. So with the dollar yen, we've got a classic risk off trade going on here. Okay. And essentially what that means is that when the markets are afraid, when they think, something is going to go wrong there, they want to go to cash. They want to make sure they protect their capital. And with the dollar yen, you can see that it's been rallying for a while. And that's part of the carry trade there. And what will happen is that everybody essentially, it seems like counterintuitive that you'd want the yen to strengthen. But this happened in the last banking crisis as well. I don't know if any of you guys remember, but trading back in 2008 and 2009, exactly the same thing happened. And we saw a sell-off in the dollar yen. So we saw the yen appreciate significantly. I think if fears remain in the markets, in the financial markets in the weeks ahead, then I think that you're going to see the dollar yen drop a little bit, at least down towards the support level at 127.40, if not even lower. And like I said, this is something that happened previously. So we know that this is the nature of this particular pair during, times of risk aversion, during times of turmoil in the market. So we know what to expect. We know how to trade it. But as I said at the beginning, ultimately, the way that we want to trade in the week ahead, in the weeks ahead, is to be very tactical with our position. So we're looking to get in there. We're looking to get out as quickly as possible. We don't want to have capital tied up in the markets for too long because there are too many unknowns out there at the moment. So from that perspective, you can't just kind of sit with a position for a long period of time, much like I did with the dollar yen here. I was a buyer of the dollar yen back in from the 3rd, 4th, 5th of February all the way throughout February, made a really nice return there. You can't see it technically here, but the fundamental picture was there. I don't feel we have that at the moment. It may change next week. It may change the week after. But at the moment, I don't think we have that. So it really is just about trading tactically. Okay. So that wraps it up for this week's Forex Focus. I hope you all enjoyed it. I hope you got some good value there. It gave you some good ideas. It gave you a bit of a direction in terms of how it is that you want to trade your own portfolio, trade your own account. Obviously, remember that this isn't trading advice. This is just my opinions on the market. You still have to do your own due diligence and make the decision as to whether the trades are right for you or not. If you like this video, please make sure that you're subscribed to the channel. You hit the bell so that you get a notification as and when I release these videos. And if you're looking to improve your trading, you want someone to help you with that, then why not go across to my website? I'll post a link beneath the video here. You can sign up for one of my masterclasses, maybe one of my live trading sessions where we get together and, obviously I'm doing the video here, it's recorded, but we can do it live. So I'll analyze the markets live with you. You can ask me questions about various different pairs and you can sort of just see my approach to the markets and I can help you improve your trading and improve your results. Okay, so the link will be beneath the video there if you want to take a look. Otherwise, have a fantastic week in the markets and I will look forward to speaking to you on next week's Forex Focus. Take care now and have a really good week.